Hello, one rental at a time family. Welcome to today's Friday financial news for February the 3rd, 2023. Today we will talk about tech earnings such as Amazon, Google, and Apple. The big news of the week, the Fed fund rate increase, and really what you've all come for, how all this relates to mortgage interest rates, housing, and the real estate market. Now, my name is Ty Leon Guerrero. I go by TYLG, or you can simply call me Ty. I am the co-host with Mr. Michael Zuber. Michael is on vacation. He is on holiday. So today I will be delivering today's Friday financial news. So the biggest news of the week, Wednesday, February the 1st, Jerome Powell announced an increase of 25 basis points to the federal fund rate as expected and predicted for a long time. Michael Zuber's been talking about this on this channel here for weeks and months. Mr. Michael Zuber, you nailed it. Great job. So now, folks, I want to encourage you to stay with us to the very end, and I'm going to share the best news of the week. And I know everyone here, we're all concerned about mortgage interest rates and really how will this affect the housing market and house values. So stay tuned to the very end, and I'm going to help you connect all the dots on this week's information, this week's news. So now with this week, it was a big week for stock earnings. And for the most part, I would say that they were very negative and really all bad. Now, it's surprising. Again, this includes tech giants such as Amazon, Google, Apple. It also includes big brands such as Ford Motor Company and even Starbucks, believe it or not. Even Starbucks had negative news this week. And so this continues a concern, something that's been talked about on this channel about will we see continued job layoffs, and also what does this mean in the big picture of a recession in 2023? Now, especially, for a lot of you, I know we live here or you operate in tech heavy Bay Area, right here in Silicon Valley or in California. So you want to continue to watch. We will continue to monitor this as Michael always does. Now, let's look at some other top headlines for the week. Home builders continue to struggle. The housing market slump, home builders have no choice other than to offer aggressive rate buy downs. Now, what does this really mean? This is a great opportunity. If you're a home buyer and you're looking at buying a brand new home, this is a great opportunity because for several reasons. One is you can get a rate buy down, I think is the biggest. It creates more affordability. You potentially could get a half point, maybe even a whole point, depending on what you can negotiate with that home builder. I also think a lot of concessions with regard to upgrades. Home builders right now have to move inventory. If you're looking at a new home build, I think that's a great headline for you, something you want to look at. Now, another headline this week in news, Wall Street losing out to amateur buyers in the housing slump. Now, something we've talked about on this channel for a while, the big hedge fund, Wall Street, private equity-backed groups have slowed down their buying. A lot of them have become sellers because they've overpaid for properties. This is, again, a great opportunity for the one rental at a time community. Why? Because if you know your buy box and you've really studied, you're going to be able to buy better deals. Michael's talked about it. I just did a deal off the multiple listing. I hadn't done that in about 10 years, an investor deal. Michael's done several of them here in the last 90 days off of the multiple listing, which typically for us, we're getting a lot of direct to seller deals. But again, in this housing slump, this could be a great opportunity for you. Again, you just want to really know and see, what are the opportunities and knowing your buy box. Now, another interesting headline, top overvalued U.S. housing markets. Now, I feel like this one, I see this headline. I know you probably see this headline at least 2, 3, 4, 5 times a week, if not a day. A lot of people talking about a crash, a market bubble, or even lately, some of the headlines and even some of the influencers, people on social media are talking about now a market boom. So we've got market crash on one hand, we've got market boom in the other. Stay tuned. We'll break it all down. I think the best article or piece of news this week was from Fortune magazine, the writer Lance Lambert this week. He talked about that we're in a bifurcated housing correction. Now, he wrote a great article that released this week. And in this article, he basically references research work done by Case Shiller, John Burns Real Estate Consulting. Now, both of these firms specialize in housing market value research. They're nationally published. They work with a lot of home builders. These guys are very well known. As well as in the article, he talks about Zillow economists predicting U.S. home values. And really, what basically the Fed chairman, Jerome Powell, has called a difficult housing correction. Now, while national prices have deflated a bit in the second half of 2022, some regional markets have fallen off sharply and continue to fall or soften. Now, I want to just break this down a little bit and talk about what he describes as a bifurcated home price correction. Now, the word bifurcated, what does it really mean? It's a fancy word. You'll see it in Wall Street Journal and other articles talking about markets, the stock market, other markets. It really means it's going in two different directions, or it's divided in two. And really, that's very well said. Now, Lance Lambert is a very well-researched writer. I believe him and Michael have worked together on articles, and I think him and Michael have collaborated and worked together. I think he writes really well-researched pieces. And so I believe what we'll do is we'll put a link to the article in the comments here under this video. The interesting thing about it is I really like, they provided an infographic that visually shows a home value index by map and by market. It shows the United States, and it's a map of the United States, and it's like a heat map where they show home value index and what's going on. The bifurcation, meaning some areas are really soft or have fallen off sharply, and other areas have remained pretty stable. So I think it's an interesting piece. You may want to look at it. We'll put it in the show notes, the link to the article. I think also I want to reference back to something that Michael Zuber's talked about, and we've talked about on this channel. There's really three different markets to every market. You've got affordable first-time buyers. Usually that's going to be underneath, the median value or under. You're going to have the move-up market, and typically the move-up market is around the median or slightly above the median value of that city or marketplace. And then the luxury market, which is defined as 2x the median home value for that city or marketplace. So I think it's really important. I think if we look at any market, any city, any county, any regional area, I think you've really got to be able to look at those markets in those three categories: affordable first-time buyers, the second market move up, and then the third luxury. So something to be aware of. Now, the best news of the week, Thursday was a great indicator. The 30-year mortgage rate went sub 6, below 6%. Now, this is great news. Again, something that's been talked about. Michael's been talking about this for weeks now. The Fed is set up for one last increase in March, and then what Michael believes to be a pause, meaning that they should stabilize. And so Michael's called it again. Interest rates dropped slightly. We did see sub 6 on Thursday, interest rates below 6. The beauty is we're probably going to see the mortgage market stabilize. Now, so what does all of this mean? Let's connect all the dots. What does this all mean to you, a one rental at a time investor, if you're an investor, even a home buyer, or even a home seller? What does this all mean? The housing market is clearly picking up. Now, with that said, we are not through the woods. I want to offer a word of caution. Home sellers, house sellers should understand that the move up and the luxury markets are experiencing a slight uptick in activity, but are much slower in price. And typically, even we're seeing some markets where luxury is soft, and then even the move up market is soft. We're seeing price reductions and or negotiated price decreases. So the housing market is still broken, especially with luxury and move up, and is slow and soft. So do you just want to be cautious about that? On the other hand, why is the housing market broken? Affordable homes are hard to find. For the first-time buyer, for basically anyone in any one market below the median value, these properties are still really strong. If they're in good condition, if they're financeable, if they'll qualify for financing, meaning a home buyer can buy it, move into it, these properties are still in very high demand. So Michael has not changed his call for a flat market in terms of transactions. We are seeing a slight uptick. Thank God. The market is starting to pick up. You've heard me say this many, many times. Michael Zuber is my secret weapon. So if you receive value from this video, subscribe. If you're watching this on another platform, find him on YouTube, subscribe to the One Rental at a Time community, the One Rental at a Time YouTube channel. And in the words of Michael Zuber, I hope you're having an amazing day. Thanks for watching.